For years, my M1 Finance portfolio was my main hub for long-term wealth building. But as my positions grew, keeping active growth stocks mixed in with my core dividend cash flow started creating a massive misalignment. Take Palantir and Nvidia, for example. In M1, Palantir became completely bloated, sitting at over 32% of my entire portfolio, more than $72,000 overweight according to my pie target. Nvidia was sitting on a mind-blowing 1,400% plus gain from a $15 cost basis. Every time fresh cash landed in M1, the dynamic rebalancing algorithm tried to force funds into underweighted slices instead of letting me direct my capital efficiently. More importantly, M1's daily trading windows make active swing trading or managing rapid growth practically impossible. I realized I needed a strict separation. Keep M1 purely focused on conservative, long-term dividend income, and move my high-growth engines over to Robinhood, where I have complete execution control. When you move a six-figure position, you definitely don't want to sell your shares, trigger a massive capital gains tax bill, and rebuy them. That's where an ACAT, or in-kind asset transfer, comes in. By initiating the partial transfer directly inside Robinhood, my 84 full shares of Nvidia and 514 full shares of Palantir moved over security by security. My original cost basis stayed intact, no taxable events were triggered, and only the fractional decimal balances were left behind in M1. To make the deal even sweeter, Robinhood offered a 0.5% transfer bonus on individual accounts. That single transfer instantly deposited $471.95 in free bonus cash straight into my account. On top of that, Robinhood reimburses up to $75 in outgoing ACAT transfer fees imposed by the original brokerage. Moving capital shouldn't cost you money, it should pay you. Moving these growth runners isn't just about portfolio organization. It's about unlocking income strategies that M1 simply cannot offer. With 514 shares of Palantir now sitting in Robinhood, I hold 5 full 100-share lots. That gives me the ability to sell covered calls or collar strategies to generate recurring options premium. With Nvidia, holding 84 shares means I'm just 16 shares away from my next 100-share lot to start selling covered call contracts on AI volatility. Beyond options, Robinhood gives me instant order execution, 24/5 trading access, limit orders, and stop-loss management. If news drops after hours or earnings hit, I can manage my positions in real time, instead of waiting hours for M1's single daily trade window. Now that the transfer has officially settled, both accounts look much cleaner and align with their core strategies. My M1 Finance portfolio balance dropped from $275,000 down to roughly $167,000. But that drop is a feature, not a bug. The remaining assets consist entirely of my conservative dividend core, over $76,000 in dedicated dividend ETFs and income assets that continually pay monthly cash flow. Meanwhile, over on Robinhood, bringing these massive growth engines over pushed my taxable investing portfolio to over $320,000, with nearly $15,000 in liquid buying power ready to be deployed into new trades. By separating your financial engines, you protect your long-term dividend income from short-term market noise, while maximizing growth.